Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to trade Forex effectively is what I'd like to chat about today. And whether you're just getting started in your Forex trading, or more importantly, if you've already been trading Forex for a while and not having the success that you feel that you should, this information could be really helpful for you because it's the process that I used when I first started trading a live account and lost an enormous amount of money. Well, it is $40,000 is a lot of money. After studying literally years and getting information and listening to the education and all that stuff that's out there, I stepped back from that loss, and in 15 minutes, using my background in software engineering — I'd been a software engineer for 33 years, investment in real estate for 40, so I knew how to solve complex problems. And I stepped back from that loss and I looked at the entire situation of what was going on, and in 15 minutes I went, really? It's that simple? It could be that simple? I took my remaining $5,000 and doubled that in just under 4.5 months. It is that simple. Now, could you take $100,000, or could I take $100,000 and double that in 4.5 months? No. Because the risk management is different. The principles are the same, but you have to be able to understand the difference between principles and risk management. And I don't think, in looking back to how I felt about things, I don't think I was able to separate those two things. And I should have been able to do that based on my education and my training. I've got a bachelor's degree in physics, almost a minor in math. But I didn't, because I came out of my real estate career and found the Forex market and thought, well, this is really great. This is trading just like the real estate, except shorter time frame. And my potential for a gain is better on a yearly basis than real estate. So if I could compound that, I could make, I lost $1 million twice in my life due to economic collapse. I lost net worth, but I didn't lose my assets because I understood how to play that real estate game. I made that $1 million back each time, but it took me 10 years each time. What I saw in the currency market was the removal of the problem of compounding. That's how you make money, right? That's how everybody's telling you to make money in currency trading. And it's not. Ultimately, you will use compounding, but you have to use it properly, because that's not the problem that you need to solve. That's not being effective with your learning process or your learning. You say, oh, I know how to trade, I don't need to fucking learn, I'm all set. No, you're right. You have learned. You've probably learned the wrong things. So what you need to do is simply step back and listen to what I'm saying and reevaluate the knowledge base that you have and determine whether it's efficient in the way that you're implementing what you think you know into the solving the problem of trading. There are 5 steps that I'm going to go through in this video. I think it's important for you to listen to it. There are no diagrams and all that other kind of crap. Diagrams are entertainment. I'm going to talk. I've been criticized for just talking and not showing the pretty diagrams. I don't know. If you want to be entertained, go watch somebody else. I'm an educator, and this is education. I'm going to tell you what those 5 steps are, so that those of you that don't have the discipline will go, oh, I got that, I know that already. Of course you know that already. And you'll click off and you'll go watch Mr. Beast or something. My advice, and I don't need to say this to my serious subscribers, thank you very much for constantly coming in and watching my videos. I have a very small channel for the amount of time that I have been producing videos, and I don't get a whole lot of views. And my views drop off after about 30 seconds. And the reason for that is because I'm educating. I'm not entertaining. Sorry. Here are the 5 things that I'm going to discuss in detail, so it would be nice of you to hang around and listen to that so that then those of you that have sent me emails and stuff, send me an email. Let me know what you think. Let me know if this helps you. How to trade Forex effectively? Well, the first thing you have to know what the real problem is that needs to be solved. And that real problem is not how to set your standard deviation boundary conditions on a Bollinger Band, or how to do an engulfing friggin' candle pattern or London Open. That's not the problem that needs to be solved. So you need to figure out what's the problem. I'm not going to tell you what that problem is, because you'll go, oh, that doesn't make any sense. And you got to figure that out yourself. But you got to figure out what's the real problem. And then what you do is you break that big problem into smaller problems. The third thing you do is sequence those smaller problems into the correct chronological order of solution. The fourth thing is that you need to determine the boundary conditions of each of those sub-problems. And the fifth is that you can then be in a position to create what's called extensible rules that you execute in the solution of that problem. Number 1, know the problem needs to be solved. Figure that out. It's pretty simple. It's trading, okay? Figure out how to trade. Now, how do you break that big problem into smaller problems? Isn't that what you do if you were going to plant a garden? Planting a garden, that's a big problem. Well, what do you have to do first? Well, maybe you got to weed it out, and then you till it up, and then you prepare the soil, and then see there's a chronological series of problems. You can read a dictionary and it says, hey, here's a bunch of terms that we use in gardening, and you got to figure out what order to put them in. And you tilling and culling and planting and watering and all this other kind of stuff. But if there isn't anybody there to put those into a logical order, then you don't know when to do each thing. See, when you have a problem, you have to know what's the problem, how do I go about solving it, and when do I do it? What, how, and when. Nobody that I've run into understands that if you don't comprehend the importance of the when part, you're not going to be successful in creating your rules. You just aren't. And again, as a software engineer, we live by rules. That's how we program. What, how, and when. And so this breaking up of the main problem into smaller problems has to be followed by sequencing those problems, so that as you're trying to solve the major problem, you're going through this in the right order. If you were going to write a computer program to register a new employee, you wouldn't go and prepare his exit documentation, right? I mean, what would you need to do first? Have him sit in the chair so you can get information. I mean, you really have to start at the basics for things. So take those small problems that you have and sequence them into the correct order that you'll need to execute them in. Because if you don't do that, and this is why I advise against using indicators, because all of the use of indicators is dependent upon that indicator being in confluence with another indicator. Your Bollinger Band is doing X, Y, Z, but it needs to have confluence or confirmation by what the RSI is doing, and maybe moving average cross or something like that. You have 3 parameters there, yeah? You got moving averages, Bollinger Bands, and RSI. Well, what's the ordering of those things? Maybe you could just use a Bollinger Band. Maybe you combine the Bollinger Band first and then the moving average. Or maybe you do the moving average first and then the Bollinger Band. Or maybe you do you see what I'm saying? If you have 3 things, you have 21 permutations, 21 different ways that you can arrange those things. If you have 2 things, this makes it simple. If you have 2 things, A and B, you can order those 2 things in 4 different patterns. You can have A by itself, B by itself, AB, or BA. So that if you're using just 3, if you jump from 2 to 3, you go from 4 permutations to 21. And in fact, if you have 5 things that you're trying to think about doing, or you have these 5 problems that are out there and you haven't sequenced them in order, then you have 325 different permutations that you can arrange all those little problems in order to solve. And probably you'll get the ordering wrong or solutions wrong, and they won't communicate together with each other, and then it's a mess. In the early days of computer programming, where we had structured programming methodologies, that's exactly what happened. And you ended up with what we called spaghetti code. It was just all over the place. If this is happening, to go over here and do this, and this happened, to go over here and do this, and this, it was just all over the place. And that was all resolved by the object-oriented development life cycle, the software development life cycle under an object-oriented methodology. That was resolved then. And part of the necessity of working in an object-oriented environment is identify your problem, break it into easy chunks to solve, order those into the correct sequence that they need to appear in. If you can't determine where that thing should be, maybe that problem is part of another problem. It can't be by itself. So you simplify the number of problems that you have broken out to those problems that are correlated. And the reason that the indicators that you're being taught to use are not effective is because they're all the same thing. Moving averages, Bollinger Bands, stochastics, they're all the same. Why are they all the same, Peter? Because they all are based on averaging of past data. They're all the same. It's like I could say hello, or I could say hola, or I could say guten tag, or I could say benvenido. I'm saying the same thing. I'm just saying it 4 different ways. So why bother? Well, you need to communicate with these other people. Yeah, but when you're solving software engineering problems and when you're solving the problems of trading, you're not needing to do that. Who's the dog in this and who's the tail? You got to be the dog as the programmer or the problem solution coordinator. You can't be the tail getting wagged all over the place. And so it's your understanding of the problem that facilitates your ability to sequence the subproblems in the correct order. And that's why the first thing you got to know is what's the real problem you're trying to solve. Because if you don't know that, how are you going to break it up into sequentially relevant pieces? You're not. So you break the big problem into smaller pieces. 2. Number 3, you sequence those problems in the correct order. And number 4, you determine the boundary conditions of each of those problems. I'm planting a garden. The first thing I have to do is weed that garden. Right? Well, what are the boundary conditions of the weeding solution? The boundary conditions are the perimeter of the rectangle or whatever it is that your garden is going to set in. That's as far out as you go. If you try to go outside the garden into the lawn and do the weeding, you've crossed a boundary. And that's called scope creep. Instead of just weeding the garden and getting that done, you're out picking dandelions in the yard. That's not the part of what we call the problem domain that you're trying to solve. If you don't understand this stuff, you should not be trading currencies, because the currencies are the simplest of the financial vehicles to trade. They're so simple, they make real estate looked like you'd need to be a freaking genius. And real estate's really difficult. It is. There's just a ton of shit you need to know. You know, if you open up a FOREX currency trading book and you look at the index, you got 3 or 4 or 8 pages of definitions of stuff that you're supposed to know. I wrote all that stuff out and called it all out. There's 5 things, 5 major things, topics that you need to know, and each one of those have 3 or maybe 4 subtopics to them. So you've got about 15 things that you need to learn, not 8 pages of terms. And those 15 things I've got ordered in their level of importance. And that's how I create my rules. Because once you define your boundary conditions, it makes creating the rule simple. If I was to say, well, I'm going to weed the garden and I got to water it, well, how much of the weeding needs to get done before I do the watering? And you get all of this conflicting solution stuff that's going on. Just weed the garden. How do I weed the garden? I go like this. When do I weed the garden? Right after I culled out the rocks or something. Okay, whatever it is that your solution set involves in. But once you get a hold of that sub-problem, you need to define what we call in software engineering the boundary conditions of that problem. So you're not solving problems that don't need to be solved. You're not scope creeping your analysis in the solution of the currency market. Once you have sequentially ordered, boundary condition, valid problems to solve, you're then in a position where you can create what we call extensible rules. You can't have a rule that says, I'm going to put my hard entry stop at 10 pips. Now, I might say that in many of my videos just as a generic whatever, but I always step in and say, I'm working on a 5-minute chart with an average 5-period ATR. So my 8 to 10 pip stop would be short for somebody who's up on maybe a daily chart. So it has to be put in this perspective. Well, if you took a 5-period ATR with a 10 pip stop, you're basically doubling the ATR. So if you're up on the daily chart, what that might mean, if you were stupid, is that I've got a daily candle with an 80 pip ATR, so I got to have an 80 pip stop. And everybody's anal sphincter goes, but that's the rule. So you have to be careful that your rules are not static. They have to be extensible. So my rule is, just for example, taking that entry condition. If you're trading on a 5-minute time frame and it has a 5-period ATR, then an 8 or a 10 pip stop would be okay. But it's only the extensible conditions for that set. The rule still goes up and says if I'm trading a daily candle with an ATR of 80 pips, then this is the condition that I have to follow. Now, I'm not going to define that condition because that's the extensibility of that rule. If you're going to trade on the daily chart, then you need to be able to figure out what all the mathematical conditions are that allow you to end up with a good win-to-loss ratio, an average win value, and acceptable per trade expectation value. Those trading metrics that we have, you have to dry lab those backwards and say, I need to have these conditions in order to end up out here. And then you say, okay, if I want to end up out here, then I can backtrack and I can say, well, these are the things that are going to have to happen if I'm going to be a 60-40 trader, 70-30 trader, 55, whatever those win-to-loss ratio parameters are. So that's how you build an extensible rule for the solution of each one of those sub-problems. Now, what I have done in my analysis after I lost all that money in the 15 minutes, I stepped back from it and I go, I was solving the wrong problem. And so I looked at the generic market and I said, well, I'll just steal something from software engineering, which is the software development life cycle. The software development life cycle says you begin with this kind of analysis, and then you move to this, and blah, 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 and you go to phase one, which is your first deliverable, and then, so that's a process that you go through in the solution of a problem. So I stole that, and I call it the life cycle of a currency position. And there are three problems within the life cycle of a currency position. The life cycle of a currency position is the problem. That's the problem of trading. The problems, the sub-problems within the life cycle of a currency position is entry analysis, position management, and entry methodology. How many times have you heard me say that in these videos? It's because it's very important that you know that you can see that those are the only three problems that you need to solve, that you need to build, and they are in sequence, right? You don't do exit methodology before you do entry analysis. If I didn't have that sequential ordering, I'd have 21 different problem solution sets that I'd have to solve for. But this way I only have three problems and they're in sequence. It can't get any easier than that. And I establish boundary conditions for the entry analysis stage. Where does entry analysis end and the position management of that start? That's an important boundary condition that if you broach over in your entry analysis, you're going to be screwed. So those rules, and it took, again, it took me 15 minutes. I go, oh, it couldn't be that simple. I got to figure that entry out, I got to do position management, I got to get out of the trade, I got to be over here and exit the position. So here's three rules, boom, 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 boom. And then I made them static, what we call a framework. And then I built the extensibility into them, but I hadn't built the extensibility in until later. I just needed the rules to prove out that the process was right. See, it isn't just so much having rules, you have to have process behind those rules. I knew I had the process because I understood the process of problem solution. So I took the $5,000 and I messed around with a little bit for maybe 4 or 5 days, I think 3 or 4 days, trade mini lots against it. I had the capability, obviously, on that $5,000. I trade one lot per $10,000. I'm 10 to 1 leverage. Those of you that think you're going to win the world at 100 to 1 or 500 to 1 or 200 to 1 leverage, you're delusional, and I advise you not to contact me because I can't help you. And I piss a lot of people off by saying that, but all you're just walking dead. You haven't, I used to, you're walking brain donors. You just haven't figured that out yet enough, and you're still walking around. I took those three rules that at that time were created statically because I knew what all those conditions and parameters that I was going to be trading under, and that's what enabled me to double that 5,000 in 4.5 months. And also to understand where the weakness would be, where that would break down, because the extensibility capability of those rules, where that process would break down over about, trading, I don't know, 8 or 10 lots, something like that. And by the way, I wasn't 5 full lots. I had $5,000, so I was trading 5 minis. So I doubled that, $10,000. My mistake. I'm not used to thinking in terms of minis. But $40,000 lost, $5,000 left in the potty. That's 5 minis, and I'm trading that. okay? How to trade Forex effectively? You got to know the real problem that needs to be solved. Number two, you have to break that bigger problem into smaller problems. Number three, you have to sequence those smaller problems into the correct order. Number four, you have to determine the boundary conditions of each of those sub-problems. And number five, that gives you the ability to create extensible rules that solve that problem upon execution. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.